What's going on, apes? Hope everyone's having a good Sunday. This video is going to be a little different. It's going to be more of a psychology video, but also how to know you're maturing as a trader. So, there's two types of traders. There's trader A that, wants to always be right, and what's more important to them is they're right about what their idea is, and they're very egotistical and always have to be right. And then there's trader B that is open to different ideas, and when they're wrong, they accept it and they learn. So the goal is, as a trader, to essentially have multiple ideas for any trade entry and exit with invalidation, and when it's wrong, to document why it's wrong until it becomes automatic. So at some point when you're trading, your autonomic response when you get something wrong is you're just going to subconsciously know, okay, I entered early on this trade. This is a trade where I should have waited for exhaustion before going long. It's my bad. I'll learn from it. And then you internalize it. A lot of traders are more concerned with being right than making money. So this trade is about a failed setup that I gave last night. Again, I gave a caveat that it is Friday night and the market has been a bit scammy lately, so use good risk management. So the idea was Sui, context was Sui was running like crazy, right? It did take an external high, one of them anyways, because there's multiple highs or liquidity pools to take, right? But it took this one and it started to pull back. So in this situation, I was basically toggling between multiple different time frames, and you could see here there was two imbalances, right? So I was looking for, when it fills one of the first 1 hour imbalances, where would the what did the structure look like when it filled it, when it backfilled? So if we go back in and we have a look at the failed trade. Sorry, I had this all queued up before the stream. Not sure what I did here. But yeah, here was the idea. So I posted when price was right here, in what I saw was a 1 hour MMXM. So again, this is the 1 hour imbalance, right? We talked about time frame alignment. Now the thing is, there was two imbalances, right? If we treat this as the dealing range, both of them were in discount, right? One of them was barely in discount, the other one was deep in discount. So the first one right here that I was keying the trade off of was in discount, but it was like right around equilibrium. So again, it wasn't the deep value entry, but it did fill. Looks like it keeps, every time I change time frames, it changes my replay. Okay. So anyway, right here I was posting it to potentially go long, because I see a 1 hour MMXM with 5-minute structure targeting the highs. And you could see it was doing really well. And then in London session, while I was sleeping, I got stopped out, right? So there was obviously low liquidity manipulation in London, and this trade failed. It ended up stopping me out. So that was during London. And then boom, it got a bit of a bounce and then continued to move down into the deeper 1 hour imbalance. So that was the failed trade. Here's the other one. So if I was awake when this trade failed, I would be looking for the next imbalance for this similar type setup. And if we just fast forward a little bit, you could see it tags it and it gets a bit of a move out of it. So here's what the trade should have been. I should have been very greedy. You could see here it rebalanced the 1 hour into this very clear demand zone. There's obviously a very very visual cluster of demand in this range. So this was a safer entry, whereas here you had layered imbalances. So this is where I went wrong. Even though the trade was going well after the entry, I had a very nice move, but I shouldn't have went to sleep with an open trade knowing that there was a potential that it could go into the deeper imbalance, which was a safer entry, safer model. So this is the one that I'm seeing right now. And I've entered again, rebalanced the 1 hour. And if we zoom out, the reason this one's a much better entry is because, you know, it rebalanced the 1 hour in the deeper imbalance and discount, and it left behind equal highs. So you have a very clean 15-minute liquidity pool here to target. These are equal highs, right? So in this model, the sell program activated here, but it didn't take out that high. Technically, you could say it was already activated here, but I mean, just for the visual, we'll say it was activated here. You could see an imbalance here. It rejected. That was your low risk sell. Then you have your first level of distribution here, right around these failed swings, and then you could see it breaks down. So this is like we talked about in the stream yesterday. That was stage 1 distribution. Stage 2, again, they stopped volume right before filling that 1 hour imbalance, and then it flushed into the target with a very fast move. Once it rebalanced, here's where your buy program is activated. So I entered on this wick here. This last up candle before the aggressive fast move down to rebalance was a bearish order block. So once price consolidated here and then broke above, you could see it's inverting it as support. This is now bullish breaker. Now the other things to be aware of, there's 2 4-hour imbalances, right? So this is why I use multi-time frame. So for my idea on this second MMXM to be wrong, you would have to rebalance this 4-hour imbalance and then reject in this order block. So that one up candle before the push down, that's a 4-hour supply. So if it gets into here, I have a quick target, consider TP, just in case they do some more nonsense in the range and it does reject in the 4-hour imbalance, because then it could easily target the deeper 4-hour imbalance. Now if it breaks and closes with energy above, then my bias shifts into this 5-minute market maker model, targeting equal highs after it rebalanced the internal. So again, the time frame alignment is 1 hour into 5-minute structure, right? So that 1 hour imbalance or 1 hour internal range is now targeting the 1 hour equal highs, these two. Or you could just say the 1 hour external highs. It looks cleaner on the 5-minute and 15. You could see the equal highs, so it's an even better draw. So we'll see how this develops, but if I'm trading this from the low, you should take profits in here. I'll probably take some right after this, but you want to see it get through this bearish 4-hour imbalance with energy above these highs. And if it does close on the lower time frames above, I would look for it to start holding on lower time frames to really target those highs. If it doesn't, and let's say even the 1 hour candle closes below, I'd have to cut the trade, right? So in 5 minutes, I'll know whether or not I need to cut the trade and then just full TP or like 75%. But the idea is, mature traders or traders within the maturation phase, you're learning from what your mistake was, and make sure to document. I use Edgewonk. I used to use Edgewonk. Now it's kind of just screen time, right? I could see and I remember subconsciously, okay, I took the early imbalance. I went to sleep with an open position when it was a riskier one. I should have closed and then just waited for either the morning or set a limit in the deeper imbalance and then taking that. So I know now to watch for that on my next trade. And that's the only way you improve as a trader. Otherwise, if you're not documenting, you're not solidifying what the mistake was in your mind and subconscious, and then you're going to end up making the same mistake over and over. So hopefully you enjoyed this conceptual video. And if you guys have questions, just let me know anytime. Cheers, guys.